The best contribution you can make to Bitcoin is just hodling. But hodling isn't easy. Hodling is actually very difficult because Bitcoin doesn't move in a straight line. Sometimes if we think of a model that projects into the future, we think like, okay, we can do that. We'll just hold on. But then reality sets in and we get confronted with all the volatility of Bitcoin itself. And so today we're going to look at some of the fundamentals to gain conviction, and we're going to have an in-depth look at the adoption of Bitcoin by looking at its cycles and on-chain analysis. So I hope you're ready. But first, a bit about myself. Why am I standing here as a carrot in front of you today? That is because I value my privacy, and I urge you to do so too. My conviction in Bitcoin is actually what made me realize that privacy is so important, because if we think about the upside potential that Bitcoin has, maybe you're okay today, but are you still okay if Bitcoin does a 10 or 100x from here? And so I'm very happy and grateful that I made that decision 8 years ago. But it isn't always easy, especially at days like these where I have to show up like this. It's a bit uncomfortable. It's harder to network with people. But on any other day of the year, I'm actually very grateful because it adds to my personal safety. So I urge you to think about privacy as well.
Bitcoin enthusiasts, brace yourselves. 2025 might be a game-changing year. According to Rational Root, an influential on-chain Bitcoin analyst and lead at Bitcoin Strategy, Bitcoin's rise is far from over. Currently, it stands among the world's top 15 currencies, but projections suggest it could soon soar to $600,000, with the potential to eventually reach a staggering $6 million per coin. Rational Root's analytical approach, especially his use of spiral charts, has earned him a devoted following of over 180,000 crypto investors. His research indicates that Bitcoin's 4-year cycle is progressing exactly as anticipated. His models suggest a 2025 price peak that could fall anywhere between $100,000 and $1 million. During his recent keynote at the Bitcoin Magazine 2024 conference, Rational Root delved into the factors driving this anticipated surge, particularly Bitcoin's constrained supply. He argues that a significant supply shock is on the horizon, positioning 2025 as a pivotal year for Bitcoin's growth. For those eager to see his data, his breakdown of the 4-year cycle spiral chart at the end of the video is a must-watch. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Rational Root.
You might wonder, where are we today? Now, we went all the way from zero to a value of above $1 trillion today, and that is actually really remarkable. Bitcoin really, if you think about it, couldn't have done any better. We're now at the stage where we have institutional interest, where we have nation-state interest. Bhutan is mining Bitcoin. El Salvador, Bitcoin is legal tender. The US is talking about a Bitcoin strategic reserve. And also the biggest wealth manager in the world is advocating for Bitcoin to be part of a portfolio. They compare it to digital gold. Well, let's look at Bitcoin and compare it to the analog counterpart. So here we look at a log scale, otherwise Bitcoin would just be a steep curve up. We still have some way to go, maybe about a 10 or 15x to really start competing with gold, but that might happen over the next 5 to 10 years. Now let's also show the halvings in here, which is when the inflation rate gets cut in half from Bitcoin. And we actually surpassed now the 4th halving, which made us go to an inflation rate of about 0.8%, which is lower now than that of gold. So Bitcoin is becoming more scarce than gold itself. We also see a bit of the cyclical behavior with these halvings. And so we see that it takes indeed about 2 more cycles to really start competing with gold. But that might happen in the next 5 to 10 years. Now let's also look at some fiat currencies, for example, the euro. With the euro, we see actually a very similar picture. So also 2 cycles, 5 to 10 years. We could seriously start competing, at least by this comparison of the M2 money supply of these fiat currencies. And the same is true for the dollar, which is the current world reserve currency. So we're actually already competing maybe in 5 to 10 years with the dollar. Now, let's look at a former world reserve currency, the British pound. That looks already possible to really start competing this cycle. And if we plot another country, here is the country of Mexico, then we see that we already surpassed this cycle and we might be above it for good now. So with that, Bitcoin is already in the top 15 of world currencies. And if we look at the M2 money supply of the euro, so the amount of euros that are currently in circulation, we see exponential increase. So we have an exponential curve. And so actually we went over the past 15 years since Bitcoin's invention, we went from $8 trillion to about 16 trillion euros, I should say. And so that's a doubling. And so that also means our purchasing power got cut in half. And we all felt that a bit during the COVID era, where we see here that steep curve up even above the trend and, where inflation run hot. So they had to really pull the brakes, which they did for a year and a half. But now it seems we're back on the old path. And so we know that the euro will indefinitely go up by 5 to 6% per year. And if we compare this to Bitcoin, which let's plot Bitcoin in here as well, we see a whole different type of curve. Now, Bitcoin is on the right y-axis here. We went from 0 to about 20 million Bitcoin in circulation. But let's just compare the curves. So we have one that flattens out and the other one which increases exponentially. So also with Bitcoin, we can project into the future. So we already know the future supply issuance. So Bitcoin really is about digital scarcity, and its hard cap is so fundamentally different from the euro. It really makes for a different monetary policy. And so the reason I want to talk about this, because many of you might know this, but I find it very important, and I want to do just a practical example. So let's compare the euro and Bitcoin. And we take a bucket of 100%, and you may fill in, for example, your savings that you have in euros or dollars for the euros, and the same for Bitcoin. And we're just going to compare the monetary policy. So I know Bitcoin is volatile, so let's set that aside for a second. So if we plot the data over the past 5 years, we actually see that we lost about 20% of our purchasing power with the euro. And you can take basically any part in the history of the euro, and you will get more or less the same result, about 20% of purchasing power that you lose in 5 years. Now with Bitcoin, we also lost 8%. Well, many of you think Bitcoin, the hard cap of 21 million, but Bitcoin still has an inflation rate, but it's predictable. We can show the halvings in here as well. And so you can see how the curve is a bit steeper before the halving and it flattens out. So we also know that the 8% that we currently had over the last 5 years of devaluation, it will only be 4% over the next 5 and 2% the 5 years after that. And so this is very different from the euro. So in the euro, our purchasing power gets devalued a lot faster. But I have a hack for you. We can also take on debt, right? So let's do the same experience, but now with taking on a loan. So perhaps you have a loan, so you can fill in again the same amount or the amount of your loan that you have for the 100%. And we're going to do the same experience. Well, obviously, it's the exact same result. Also, our debt gets devalued. And this is actually quite a good thing, right? Our debts get devalued by 20% per year, or 20% in 5 years. That's great. But there is obviously a catch. If we take on debt, we also need to pay interest. So also let's account for that. We plot the interest rate here as well. And we take an interest of 3.5%. Also, of course, the interest needs to be accounted for the devaluation, which we do here as well. And then we still see that in the euro, we're better off. We're still below 100%. So it's still, even though we have to pay a significant amount of interest, we're still better off taking on that loan. Where in Bitcoin, taking on debt gets actually discouraged. So it's not that you cannot take on debt, you just need to have a really good reason. Now, why do I talk so much about this? It's really, what is the moral of the story? The moral of the story is that we are forced into the left system, and we really need to start thinking about what we're going to teach our kids. So enough about fundamentals, let's look at Bitcoin's volatility, because you might say, okay, Bitcoin is a better savings mechanism, but what about all the volatility? Well, first one has to realize that with any new technology, there is speculation. Technology implies speculation. We saw that with the internet adoption. For example, here you can see the chart of the NASDAQ during the dot-com bubble. We also saw a lot of volatility, so it's normal, but that doesn't make it easy, right? But volatility comes from a lot of human psychology. We're all human beings. We all make decisions based on our knowledge today. And so we're all susceptible to these emotional phases And so you might have heard about the Wall Street cheat sheet. It's a famous chart in the financial world where they try to map out these psychological levels. And so really we go from disbelief to optimism to euphoria to panic and capitulation back to disbelief. So we go in circles in that with that human psychology. Now, let's try to map this to Bitcoin. Now, it's quite hard because we don't know when is Bitcoin overvalued or undervalued. And that's when on-chain data comes in. So if we think about on-chain data, we actually have access to all transactions in the history of Bitcoin. And so, for example, we can look at the age of coins. We can see if a coin is 2 blocks old, if there's a transaction of 2 blocks old or a transaction of 850,000 blocks old. That's a vast difference. That tells us something about the activity of the supply. So if a lot of old coins come back to life, the supply becomes more active. Now we can also look at the purchase and sale price of a Bitcoin, which tells us something about capital flow. For example, if someone bought a coin for 50,000 and he sells it to me for 60,000, there's only a 10,000 increase in capital flow for that coin. And so we can measure the capital flow. So we can look at the supply side of things by looking at the active supply, and we can look at the demand side of things by looking at capital flow. And this allows us to actually create over and undervalued levels. So if you look at this chart here, we start at this blue dot, which is the Bitcoin halving, and then we move up and we get a lot of those green all-time highs, and we have a big green dot there, that's the cycle top, and then we move back into bear market and we get this big red dot, which is the bear market bottom. And so on-chain can help us identify these under and overvalued levels. Now, let's apply this to Bitcoin, and we're going to do this in a spiral chart. We're going to map out the Bitcoin cycles. And so we take the spiral chart here, and we start in the top, and one full rotation in the spiral chart is a period of 4 years. And so with each cycle, Bitcoin actually tends to move to a new range. So we go from 100 to 1,000 to 10,000, and we're now in the transitioning towards that 100,000 range. Now, if you plot all of Bitcoin's history from all the way back from 2009, so let's just map out all this data in this chart, we actually can still not see anything because here Bitcoin still doesn't have a price. But now we can see the first dots appearing here in the center, and we move up quite fast here, all those green dots that appear, which is followed by this crash here that we make a red dot, which is the bear market bottom. Then we get a blue dot there in the north, which is the first Bitcoin halving. And then we continue, we get a bull market, we get all kinds of green dots there. And then we continue back into a bear market, and we make a bottom there in the south of the chart, a big red dot. And we kind of move, we get a recovery phase, which is a lot of sideways price action. We're in 2016 now. We get the second halving, and we move back into more positive price momentum, and we get all these green dots appearing again. And so let's pause here for a second. We are now 9 years into Bitcoin, so 2 cycles plus the extra year, which is that green zone there on the end. And so if we would have to map the psychological levels, we could definitely say that we have 2 cycle peaks there in that area, which would be really the phase of euphoria. Now, if we know this part is euphoria, we can actually also start mapping the other phases for Bitcoin. So let's do that. Let's continue. So of course, with euphoria, we feel like a genius, right? We think like Bitcoin will continue to go up. But then, we quickly realize that Bitcoin doesn't. And then we panic and we capitulate. And then, of course, we feel a bit of depression. And then we have to go through a phase of enduring where actually conviction is made. And, we're in this disbelief and doubt phase for Bitcoin. Price doesn't do very much. But then there's again a halving, which gives a bit of hope. And so we get a bit more calm and we get a bit more optimistic. And so the price starts moving back up again, and we get a bit more of green colors coming back. So we're excited and we think like, yes, we're such a genius, right? We're again euphoria. This time Bitcoin will actually, we'll go to $1 million. But then, we fall back into complacency and panic, denial, and we have to capitulate again. And of course, that brings again also some depression. And again, our conviction gets severely tested we have to endure all this sideways price action. We get to these periods of stagnation and doubt. There's a lot of doubt. Like many rallies, they just go, but then they don't sustain. But then there's again a halving, and this time an ETF approval, and we get a bit more hope, and we get calm, and this is where we are today. So if we look at the past 3 cycles of Bitcoin, we have followed the exact same psychological pattern, which is really interesting. So now we're in Q4 of 2024, we're there in the top. And so the question is, will we continue to move up? Will we again go into a bull market over the next 3 to 6 months? So that's definitely something to watch. Or will the lines cross? Big question. Now, so here we see the year 2025, which is completely made of green colors, historically. So if history is any indicator, it will be an interesting year. Yet, there's always reason to have uncertainty and doubt. Maybe this time the recession will come. Maybe the recession will fall with the next bear market. We don't know. But let's add a new dimension to this chart. So we can actually look at this chart also in 3D. And now we can actually see the undervalued and overvalued levels even better. Look at that green zone, that green area that's right in front of us. Now maybe let's spin the cycle a bit, because we're there in the back, so we have a better look at that green zone. Maybe we can tilt the spiral up a bit, overvalued and undervalued levels quite well. And a few things stand out here. We can actually see that here we made an all-time high during a recovery phase, which is quite of an exception, but there was a good reason. It was the ETF approval. So enough about fundamentals. Let's look at Bitcoin's volatility, because you might say, okay, Bitcoin is a better savings mechanism, but what about all the volatility? Well, first one has to realize that with any new technology, there is speculation. Technology implies speculation. We saw that with the internet adoption. For example, here you can see the chart of the NASDAQ during the dot-com bubble. We also saw a lot of volatility, so it's normal, but that doesn't make it easy, right? But volatility comes from a lot of human psychology. We're all human beings. We all make decisions based on our knowledge today. And so we're all susceptible to these emotional phases. And so you might have heard about the Wall Street cheat sheet. It's a famous chart in the financial world where they try to map out these psychological levels. And so really we go from disbelief to optimism to euphoria to panic and capitulation back to disbelief. So we go in circles in that with that human psychology. Now, let's try to map this to Bitcoin. Now, it's quite hard because we don't know when is Bitcoin overvalued or undervalued. And that's when on-chain data comes in. So if we think about on-chain data, we actually have access to all transactions in the history of Bitcoin. And so, for example, we can look at the age of coins. We can see if a coin is 2 blocks old, if there's a transaction of 2 blocks old or a transaction of 850,000 blocks old. That's a vast difference. That tells us something about the activity of the supply. So if a lot of old coins come back to life.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.